Welcome back to Mortgage 101, your guide to home ownership with myself, Todd Vino, and our mortgage guru, Clinton Wilkins. Clinton, do people say to you, are you the mortgage guru when you're out and about?
You know what? People do recognize me.
Yeah.
I mean, there are a lot of billboards around.
There are.
And I've been on TV. Obviously, we've been on the radio for years.
Yeah.
I don't know if they recognize the voice so much, but I think they kind of recognize the image. Maybe.
It's iconic.
I don't know if I'm iconic or not. I'm certainly getting older. But the one thing that I can say,
yes,
and I even said it today. It's Monday. If anybody's curious, we're recording this before the weekend.
Yeah.
And I love the first of the week. I love the first of the month, and I love when the seasons change. I think it just gives you a fresh start.
Yeah, I would agree with that.
And spring is literally around the corner.
Yeah. So spring's around the corner. So spring market is traditionally and typically the hottest market of the year.
The spring market is the busiest market for real estate.
Why is that?
It's because, the people have started to thaw out. They want to see sometimes what their home will look like with the grass growing, the flowers, starting to pop up out of the ground. They want to see these type of things. And I think a lot of people can't envision themselves moving when the weather's not good and they don't want to heat a house. They don't want to shovel.
Yeah.
But we have very short memories. We forget. And as soon as the spring hits, we're just right in there and we're starting to go to open houses. And I can tell you, we have tons and tons and tons of pre-approvals out there. So there's certainly a lot of buyers out there. I think the one question, Todd, is, are we going to see more listings this spring than we have last year? Because I can tell you the biggest challenge in Halifax is there hasn't been enough listings.
And that's simply because we have an influx of people and not enough new houses being built. That is the reason, right? When all is said and done.
That is the reason.
Yeah.
And I think another part of the reason was there weren't enough apartments. We need all styles of real estate. And we've said this before. The one good thing, there's certainly a lot of apartments being built in Halifax that are not quite ready yet, but are becoming ready. So I think that's going to be a shift.
Yeah.
I feel it. And typically what happens is with some of these resale homes, people will buy bigger homes, but they'll also sometimes sell and go into an apartment, just depending on what stage of life they're in.
Yeah.
So I think we're going to see a very positive uptick in the amount of listings. And we certainly still need a lot of construction. But, obviously we have concern over construction costs.
Yeah. I have a question for you. There's a small community in Nova Scotia, Lockport, and they just had a closure of a seafood plant, of a lobster plant. Clearwater, and it's sad. 100 plus jobs gone.
And good jobs.
Good jobs, yeah. And I would think, and a lot of the people watching the news and people we've talked to from that area say they have to leave. They don't want to leave, but they have to leave. And they own homes. What might that mean for the housing market? I would think would be who would buy those homes? Would be retirees and people like that?
It could be retirees, but there was something really kind of weird happened during COVID.
Yeah.
People were buying up real estate in every little nook and cranny all over Nova Scotia if there was high-speed internet, because a lot of people live and work out of their homes. Obviously, you live in your home, but they work out of their homes.
Yeah.
And one hotspot was New Glasgow, Nova Scotia. Yeah. It was like one of the last places in Nova Scotia where you could buy a home, and you could buy a good home for like $200,000. I think the prices are maybe a little bit more now, but people were going and buying these homes. Great access to hospitals and shopping and healthcare or other healthcare professionals.
New Glasgow's a nice little spot.
And great high-speed internet.
Yeah.
So people were moving. Young people were moving from Halifax or really all over the country and moving to New Glasgow, Nova Scotia. It could be a very similar situation in Lockport. But typically when we see a big employer pull out of a small community, the housing market really takes a bit of a hit.
Yeah.
But I think the demand in Nova Scotia is still just so high. I think, it's not going to be 100 homes that are sold, but there could be 20 homes, for example.
Yeah.
And, those homes, I think there still will be enough demand in the community to eat that up.
So there's always people who work in IT and that type of thing and can work from home and run a business from home. That might be, if the internet is what it should be, and we assume that it would be, that would be perhaps an ideal location for some people.
Yeah, and typically in more rural areas in Nova Scotia, like Lockport is,
the
homes are not as expensive as they are in more urban areas.
Yeah.
So typically you can get a home at a lower cost, and that means that your monthly servicing of that is going to be less than if you were in a different area.
Yeah.
So that might be a good opportunity for some first-time home buyers.
Absolutely, yeah, for sure. And like you said, if people are willing to live in rural areas, and it's a nice way of life.
Yeah, and I grew up in rural Nova Scotia.
Yeah.
I mean, you're from New Brunswick.
Yeah.
There's lots of rural areas there.
Yeah,
I
I
can
grew
tell
up
you
just
there.
outside of St. John in a small little community outside of the city. But so yeah, I get it. I know what it's like to
There
grow
are
up.
pros and cons, and I think that's what you need to remember when you're buying a home. Yeah, it's location, 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 but can you make that location work? And how does the location weigh up against the servicing costs?
Yeah.
So lower cost to housing, but maybe it's higher costs of transportation.
Mm-hmm.
Maybe there's not as many employment opportunities, but it's a lower cost of real estate. So that's where you need to really find the balance. And it's hard for me as a mortgage professional to say, okay, you can afford to buy a home at $500,000, but should you buy a home at $300,000, but it's an hour away? I don't know. There's give and take.
Yeah, for sure. So overall, the market, like you were saying in Halifax, is in need of some new stock.
Certainly a huge need for more inventory.
Yeah.
And I can tell you, we are way busier than last year. We're doing 40% more transactions today than we were this time last year.
That's amazing. Why is that?
I think rates being down, helpful.
Yeah.
A lot of noise in the media around what's going on south of the border in the U.S., the Bank of Canada rate decisions, and really what's going on in the bond market. There's a lot of pressure, and I think there's a lot of pent-up demand from last spring where people might have got pre-approved, but at that point, the rates were in the 5s.
Yeah.
And now we're in the 4s. So, that is more optimistic for people. The servicing cost is less. And I can tell you right now, Todd, people are not as concerned about the rate, but they're buying the payment.
Yeah.
That's what they're most worried about right now.
Yeah. Well, I mean, and again, this ties back into variable and versus fixed, and we've had that conversation, and we can have it a little later in the show.
Sure.
But there was a lot of concern about a rate cliff with renewals.
Yeah,
coming.
the renewal cliff.
Renewal cliff, rather. Are we there yet? Has that happened?
I think they're happening.
Yeah.
I don't think the cliff was as bad as was projected.
Because rates came down a bit.
I think if the rates were still in 5 and 6% range, I think we would be in harder shape.
Yeah.
Rates in the 4s, people can handle it.
Yeah.
Sure, their payment's going up. I met with a couple today. Their mortgage coming up for renewal. They had a rate in the mid-2s coming up, and now their rate's going to be in the mid-4s. It's costing them $300 more a month. But they didn't owe that much. They have only 10 years left on their amortization.
Yeah.
They can handle $300 more a month. They're making significantly more than they were 5 years ago.
Yeah.
They both had received raises, and they're like, $300, we can deal with this. This is not a big deal. Yeah. So we talked about some options of either shortening or lengthening their amortization, just because obviously the rates are higher. And we're having these same conversations with all our clients. I can tell you, we have so many clients coming to see us that have mortgages renewing with the Big 5. They don't love the rate. And sometimes when you refinance, you might not get a rate as low as you'd be offered on renewal, but they're choosing to take equity out or extend their amortization. They're buying the payment, Todd.
Yeah.
The rate is tertiary. The rate is secondary, but we're still giving them really, really good advice. And that's where I think right now we're in the advice business, more so than just doing a widget of a mortgage. 5 years ago, we were just trying to stay above water because it was so busy. We were in more of a transactional business. And now I think it's certainly shifted to more advice, which I'm here for.
Yeah, for sure. And I mean, as far as rates go, how low do you think rates might go this time? We're probably not going to see.
I think we're going to see rates in the 3s. I think that's going to happen.
Well, the 2019, 2020.
Like, do we
levels.
think we're going to be down in like the 149, 249 range again, Todd? I don't know.
Yeah.
There's been 2 times in history where Canada, the Bank of Canada, has basically decoupled from what's going on in the Fed in the U.S. Typically, we move in concert.
Yeah.
I'm not saying we absolutely do, but typically it's pretty close. But there's been 2 times in history where one has gone one way and the other one has gone the other way.
Yeah.
And we might be in that zone right now. Inflation in the U.S. is high, where inflation in Canada is under control. So we could see the Fed in the U.S. increase the rates, but the Bank of Canada still continue to cut. Obviously, what happens with tariffs can certainly have an impact.
Yeah, and stress test is still at play for people?
Stress test is still at play for a refinance and a purchase. On a renewal, changing between lenders, no stress test.
Right.
Which is great. So now, sure, there's more opportunity, I think, for competition. I think there were some times where people would just like renew with their existing lender because they're like, well, we don't have to go through the stress test. We don't want to have to requalify. Yeah, you still have to requalify, but no stress test, which is awesome.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.